Hi, welcome to this video day. We are on the 7th of February, we're on Sunday. We're just going to be looking at selecting out the best trade setups. Now, in terms of Forex pairs, there's a lot to choose from. What criteria can you use to find the best? We're going to look at some tips in relation to this, and we're going to look at 4 trade setups that are shaping up right now, which are 3 euro pairs: Euro USD, Euro JPY, and Euro GBP, and a euro correlated currency against the USD, the Swedish krona, so USD. SEK, we'll go over to the charts in a moment. Now, generally, in terms of when we're selecting trades, we're really trying to get turning points and then follow long-term trends. Now, our view is the euro is going to go into a long and sustained downtrend. We've done some videos on the euro in recent weeks. We have seen some weakness in the euro, but there's a lot more weakness to come. Now, in terms of euro correlated currencies, I've picked out USD SEK today. The euro goes down, so will the SEK, and that's a really attractive trade setup as well. Now, let's go and take a look at all the setups, but just before we do so, please do keep in mind, it is my view, as of this specific moment in time, it can of course change in line with market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 FX pairs, just click on the link beneath this video and you can get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, and check out our recommended regulated ECN broker. Right, let's go and take a look at the trade setups. It's going to be Euro USD first. On the chart of Euro USD, I'm just going to use the charts from our member center. I'm just going to go through the technical levels, the way and why I've drawn them the way I have in a moment, how to get in on the trade if you wished to do so. But regular viewers will know we draw our technicals. They're heavily influenced by sentiment. So I just want to show some sentiment charts. What we want to know is where the big money is behind the chart and why they are positioned the way that they are. They're going to give us advance warning of what is going to happen in terms of the technicals. Now, dollar, this is a chart of the size of the speculative short position in the dollar. It's just a general chart against all other majors, but what you can see is when you're below this line, obviously speculators heavily short. Look at the size of the short position, bottom right, 34.88 billion. Couple of instances, 2011 here where my cursor is, in 2008, where speculators had similar big short positions. Both occasions the dollar rallied. Now, in terms of the really big money that's short the USD, it's long the euro. I'm just going to show you what's called the City Pain Index. It comes from Citibank. Down here, red line, this is speculative funds and their positions, okay? And you can see on the right, speculators really buy the euro hard up to this dotted line, then they roll over, and so does the euro. Now, similar extremes at the dotted line, you can see them here, there's 4 of them. The euro topped out and had big falls. I think this one here that I'm circling, that's the smallest one, obviously. I think that's about 800 pips, okay? Why are speculators so long of the euro? The reason they're so long of the euro is due to the view that the Eurozone economy is going to do well going forward, do better than the US economy. But it won't, and the facts show that it isn't. In terms of Eurozone, much more impacted by lockdowns than the US. You can see the Eurozone, well, actually, there you go, sorry, the Euro area is the green line. Big impact on activity, coming back a bit, but look at US, way better than Eurozone, okay? In terms of, well, we know in Eurozone that the virus very much impacting lockdowns, got a little longer to run. And, in terms of the US, speculators were saying, a short while ago, they won't get the vaccinations together. It's really going to spread in the US. But look at this declining number of people hospitalized with COVID-19. basically the US vaccinating, they're not so impacted by lockdowns. So, economic activity not being as disrupted as it is in Eurozone. So, here's another chart, which is generally the US, how they're doing in manufacturing and services, okay, against 4 countries, Eurozone, UK, Japan, and Australia. Euro area is the worst of these 4 countries, but you can see in terms of manufacturing output, the US up here, other 4 going down a bit, services, US up, other 4 down a bit. So what you've got, market heavily long of the euro still, and basically you've seen the euro price come down. From our reading of various sources, the big speculative long position is still there. So there's plenty of room on the downside. Now, in terms of how we've been playing this pair, we're up here, market couldn't find one research analyst that was bullish of the dollar. They're all bullish of the euro. I think it's got up to 125, then 127. We double top. We get a trade at 122.65. Now, in terms of the big level at the time, it was 122. I covered this in a previous video, and that level was important because look at how the euro comes up from 116, gets above this 20-day moving average, the green line, you see it? And then it supports it all the way up. Okay, you very often get that in strong uptrends. So a break of it is very significant if you're a bear. Okay, we break, try and get back on the blue, can't get through, down on the red, travel sideways, up again to this 20-day moving average, but can't get through it, and down. If you're bearish, or if we're bearish in a big downtrend, obviously we're looking for that 20-day moving average to hold price. Now this one is pretty simple. In terms of this double trend line here, the moving average lines up with a big round number, so it's 121. Okay, round numbers is where the big money will normally do its positions around. Okay, so if we get up to the 121 level, we just come off the level, go short, stop behind the second level resistance. Okay, I've got our stop. This is 121.30. I've just put it slightly back at 121.60. What if we don't rally up? Well, I would just basically come back through the next round number, which is 120. I wouldn't wait for these lows to give way. Just straight through that round number. Then the stop could be behind that first level resistance. Okay. Now, in terms of downside, so far on the trade, it's just about 220 pips. But, if we look at the levels that I've indicated, 118 and 116, if we get to 116, that's another 450 odd pips from where we are now. And those levels that I've drawn in are, they're giving me the target from the big money behind the chart. Okay, you can't set targets of several hundred pips without knowing where the big money is sitting. Okay, so it's a simple setup in terms of the technicals and sentiment. For us, Euro USD is going down. We've seen a decent decline. More downside chart of Euro JPY. Now, in terms of the Euro, we bottom out into this 122 level here. Big move up, retracement, another big move up. Very choppy action here. We got up to make a new daily high. And we triple top, basically, on a tail and 2 bodies. We come down. We work our way back up. That big blue there, which I'm highlighting, try and take out the triple top. We can't. The reds bring us back down. Then another blue up to test the double top. We've got triple top behind. Now, from a technical perspective, yes, this is messy price action. We're not getting what we want from this pair at the moment. Presently, 30 pips underwater. But if you look at the sentiment fundamentals behind the chart, bond yields, in our view, will prevent the euro going higher on the yen. And if you're unfamiliar with bond yields, you should watch them because they're important in all FX pairs. They're important in euro USD. bond yields favour the US. I think in this pair, bond yields point to the euro going down on the yen. So what I want to see is a move through this 126 level. We get through that level, we should go to 124, then 122. Dollar is very oversold, so is the yen. At the minute, 30 pip loss. I may not let it go to stop loss if we open where we are a little bit lower. I would just scratch the trade, come in through this level here. Okay, not doing what we want so far, but yeah, yen just very oversold. Yeah, dollar is as well. The dollar rallies, the yen will as well. So we see how this pair goes. In terms of experience has done what we wanted it to. It's Euro GBP. And look at this messy price action here, first of all. This is when the trade deal is being negotiated between the EU and the UK. And every time there's a rumour of a no deal, the euro spikes to the upside. Once the deal was concluded, we felt, the euro would go down on the GBP. UK much better shape than Eurozone in our view economically. You do have poke through the 20-day moving average, come through it here, get a short in, come back to test it, fall away, keep going down. 20-day hasn't been touched. Okay, that's an indication of a big downtrend, as I mentioned earlier. I think the euro is a little bit oversold in the short term. We could rally back to 88, round number with this body here. The open of the day. But not too much upside in this pair. Any rally, a selling opportunity. And while it's been a decent downtrend, we've got decent profit in this one. There's far more to come. I'm aiming for 83 down here, okay? Which are these 4 candle tails, okay? So that's about, it's 462 pips if we get there. And I think that is on the cards. If we take the GBP, most oversold major of all, that's all to do with Brexit. It's going to retrace or it's going to strengthen on the euro, in our view. So this one, for long-term trend followers, looks like it's shaping up into a really nice big downtrend. Last pair we're going to look at is USD SEK. Look at that for a fall. Okay, we do get above that 20-day moving average here. Just can't get through it. We get our first long in, we get above it, we got taken out, we've come back in, and look at the 20-day moving average providing support. We're coming right back to the 20-day moving average right now. Now, in terms of you can see our position, we get stopped out, we get a very minor profit, but hoping we don't, we come back through this double top, go long. In my view, offers a really good risk to reward trade. It's more than 5 to 1, isn't it? Obviously, our target's got to be hit. This big downtrend, everyone was saying at the time, Sweden didn't lock down, so its economic activity wasn't impacted. But of course, the virus is running a bit out of control in Sweden now. USD very, very oversold. I made a note here. The SEK has been the strongest currency against the USD in the last year. That means there's plenty of upside in the USD. Speculators heavily short as well. Get above there. Hopefully they get run on stop and we get to our target. And just in terms of the SEK, USD SEK has been one of our favourite pairs to trade over the years. It's a great trending pair. Okay, I know it's a lesser looked at pair. You pay a little bit more on the pip spread, but not too much more. When you look at the risk against the reward, most of the time it's a volatile pair. Pip spread or pip impact is basically minimal if you're looking for big trends. So there we've got 4 pairs. In terms of trade selection, you always want to keep your eye on sentiment, where big money is positioned, and how overbought or oversold a currency is. Then you can use very simple technicals to time and manage your trades. Now, in terms of a lot of traders, they are intimidated by looking at sentiment. But for example, in our member centre, we round up sentiment. People can make their own judgments of whether we're correct or not. And there's plenty of other sources out there. It's not complicated. You don't need a degree in economics to do it. But yeah, all the world's top traders trade sentiment, and you should too. Right, that is the video for the day. Thank you very much for watching it. We'll see how these pairs work out, and probably update next week. Yeah, that's it. Thank you again. Take care. Have a good day.